to Level Up with Winnie Sun.
Hello, friends. Thank you so much for tuning in. Happy Friday to you. Are you excited? It's like the weekend is almost here. I'm so excited. Friday's easily one of the most best days of the week, right? Thank you so much for tuning in. Hope you're having a wonderful day so far. I want to say a quick welcome to my friends from Modern Mom as well. And if you're joining us on a replay, so great to have you here with us. Let's start with the market because this is the kind of news that you want to end the week with. And the Dow closed up at 179 points. NASDAQ was just shy of 200 points, closed up 199 points. And the S&P also up 37 points. As you know, this week was sort of a roller coaster week once again, but the good news that we are holding on to and enjoying and appreciating and definitely taking to the end of the week is the U.S. job reports that we showed yesterday. In fact, that the May jobs report showed actually better than expected. We're seeing more Americans going back to work, less people filing for unemployment. So all in all, very, very positive news. Now, there's also been some positive news in schools. You know, this is actually news that I saw today was shared online and talked about how because of COVID, because of the pandemic, more schools are pushing for personal finance education in high schools across the country. I've only been talking about this, I don't know, maybe for 20 years, but it's finally seeming to happen because of coronavirus pandemic. They're like, we need to get personal finance into schools for that next generation. It kind of makes sense, I think, especially given so many of us have had to do distance learning or been working from home and maybe even been sort of pushed back of not being able to save as much. Maybe a lot of Americans have also lost their jobs. So 7 states, including Virginia, Alabama, Tennessee, Missouri, Utah, North Carolina, and Mississippi, have set up what the next gen personal finance refers to as the gold standard of personal finance education, which is actually going to be pretty cool. I mean, I'm looking forward to this. Hopefully they bring this to California too, because I think my kids would definitely benefit from that, which is going to be a standalone course, a whole semester or half semester course on personal finance. You're going to learn how to budget, you're going to save, things like that. So stuff that, you know, I think most of us need, especially as we're going, you know, to college and our first job. Those are the things that we wish we had been taught in school. Now, beyond that, some 21 other states are also going to be adding some personal finance education, but it can be incorporated to other courses, so it may not be a standalone course still. We'll take it, right? We'll take it as far as we can get it. So that's something to look forward to. Now, other matters for those of you who are saying, well, I'm already out of school. You know, what else? What's important? What's in it for me? There's always something for you, especially on Fridays. And this is kind of fun. Now, you may have heard me talk about this yesterday on the Loop show with my friend Greg Nibbler. But yes, it is true. Amazon Prime Day is just a couple of weeks away. But I want you to pay attention. Because you know how there's that saying that the early bird gets the worm? Well, in this case, you get to get the Amazon Prime worm because you can actually get a free $10 credit right now. All you need to do is actually you jump on Amazon right now and you buy a $40 gift card and you put in a specific code. You want to check, you know, to do a quick Amazon search. There's a code that you want to enter. Once you activate the code, when you buy a $40 gift card, then you actually get a $10 gift card back that you can use for other things. I recommend those of you who are watching, I know many of you are business owners out there. This is a great way to treat your favorite employee or favorite colleague or somebody in your life that you want to give them a little surprise. I recommend that you do this. This is a great thing. I love doing these little surprise gifts. It's so much fun. Now, also, there's another benefit for you too, because this starts actually on Monday. Now, if you spend $10 at a participating Amazon small business vendors, you also get a $10 credit back. So Amazon's doing this to go ahead and support some of the smaller vendors on their platform. And that starts very soon. You're seeing actually on the screen right now, Curtis is showing you where you can go to learn about this. So $10 spend at a small business and you get the $10 credit back. It's a wonderful thing. It gives you a chance to help a small business out. Definitely take a look at it. It's called the Spend $10, Get $10. And it's a special offer. It starts Monday, June 7th, and it runs until Sunday, June 20th. So definitely pay attention to that. But do you know that that $10, $40 gift card deal that I told you about, that's actually up and active right now. So don't wait. Do that. Definitely do that. I highly recommend you do this. You gotta do this once in a while. You know, if you love the people in your life that take care of you day in and day out, it's a great way to show that you appreciate them. Now, it's Friday, which means it's also Ask Winnie Anything. And you did not disappoint. We got some good questions this week. And actually, some of these questions are even from my team. So let's bring them on board. Let's do Ask Winnie Anything right now. All right, first question we have. Winnie, what is a meme stock and is this new? Okay, so there's so much talk about the future work. And, you know, I've been also talking a lot about the future of the stock market. You've heard about what's happening with Robinhood. You may have heard about Reddit traders. And then you're also saying like, well, what does this have to do? What is it? What is a meme stock? You know, well, a meme stock is sort of like the current cool, trendy word that everybody's using to describe a stock that has had an increase in its trading volume, not so much because of, let's say, a new hire or a new invention or a new service. It doesn't even have to do with the company's earnings, not even by its performance, but rather because it's been hyped up online, on social media, on forums such as Reddit, maybe on TikTok, whatever it may be. And so for this reason, these stocks sometimes will become tremendously overvalued. We certainly saw that this week with several big names out. We reported on, I think AMC was one of them, BlackBerry went up. So they're seeing these dramatic increases in a very short amount of time on their stock price without maybe very strong fundamental justification. Now you might say, well, is this new, right? Unfortunately, it's not new. Like it just has a different name. Now it's meme, now it's social media. If you think about it, it wasn't that long ago when, you know, a lot of us would garner our financial information or mutual fund buying like recommendations or stock buying recommendations, we would get them at other financial forums. In fact, I remember doing this years ago when I first started investing. I remember reading Yahoo Finance, reading, I think it was MSNBC, different sources for my financial know-how too, going to the forums and people would tout certain mutual funds and certain money managers. So very, very much the same. But just a different form. And of course, because there's so much more volume and information is sharing so much quicker, you're just seeing a lot of this come into place. Now, that being said, you know, you might say, well, will this impact how I invest? Now, it can, if you happen to be obviously trading the same names that they happen to be trading at the same time, or if you're buying in or selling on the same day and time that they are as well, that they could impact maybe certain industries or even the indexes. However, the most important thing you want to remember is if you're investing for yourself, focus on diversification, focus on dollar cost averaging, you know, focus on the long term for yourself, of investing long term for those important financial goals, and you're going to be okay. But also, if you're not sure where to go, what investments to go with, instead of maybe jumping in on these forums and finding out what people are doing here, find yourself a professional. Work with a professional. In the long run, it'll give you peace of mind. It'll reduce your financial anxiety, and that's definitely a great thing. Thanks so much for the question. Let's go to the next one. All right, Winnie, I heard the term pump and dump when people talk about stocks. What does this mean? Actually, this is a great question. And this actually came from a member of my team. And so this is something you may have heard of. Pump and dump. It sort of makes sense, right? You pump something up and you dump something out. Well, when it comes to the financial markets, you know, I've been hearing it for years because I've been a financial professional now for over 20 decades, 20 years. And so what it means is, for example, you're no longer investing in something as someone, I guess, a shareholder. Like you're not buying a stock or a bond or a mutual fund and intending to hold it long term because you believe in the fundamentals. Maybe you believe in the strategy of the company, the services and the products that they produce, and the employees that they hire. You're really looking for just strictly trading. In many ways, it's sort of like Las Vegas, right? You're trying to pump something up, and then once it gets to that point, you're just going to sell it all and you're going to dump it. So that's essentially what it is. Is it a great way to invest? I don't think so. I'm not a fan of it. Do a lot of people invest that way? I don't know that a lot of people, but certainly some people, right? We're seeing a lot of that activity being reported on social media and the news as well. I would say that I think there's something really wonderful about investing in companies that you believe in and that you want to grow with and that you want to financially support and participate in the earnings of long term. So I would say, not a fan of pump and dump either, but that's what pump and dump is. Hopefully that helps answer your question. All right, let's go. Last question. This is a good one. This is a good one. Winnie, what's the difference between a refi and a rate adjustment for my mortgage? All right. Great question. Great question. I got to say, if you've heard me talk about refinances lately, you know there's real reason for that because interest rates have been historically low since the pandemic and even before that. And so right now, if you own a home and you haven't refied, or maybe you have refied, but maybe you refied a year ago, it's probably good for you to take a look at what your options are to maybe reduce your monthly expenses, your payments, and maybe get your house or townhouse or property paid off even more quickly, right? And I'll tell you, during this pandemic, I have actually adjusted my rate 2 times. It's crazy, but that's what happens. So when you refinance a home, typically what that would entail is you would work with a mortgage banker or broker or, or a mortgage broker, and they would go through the different terms, different loans, the different rates, and your different options. And then you would go through that process. You'd probably have to provide a whole bunch of financial documents. You would sign applications. You provide your tax returns. You might even need to get your accountant involved. You might have to have someone come into your home or property to inspect it, to do an appraisal, yada, yada, yada. It's quite an extensive process. Now, that being said, you do that because you want to reduce the rate on your mortgage. That's a beautiful thing, right? So there's a cost to it. It could be a monetary cost, and it could also be a time commitment for you as well. So two parts to that equation, right? But generally, it takes a long time. In fact, now refinances are taking longer than they did a few years ago. You just need more information. And not only that is you have to have income and a good credit score. So when you apply for the refinance, you have to have income and good credit. And when you're about to close on the refinance, you also have to have good credit and income, right? So if you went through a job loss, either pre or during this refinance, it can get a little problematic. Now, the rate adjustment, though, is an option that a lot of people have heard about. And I will tell you, as a financial professional, I actually didn't even hear about this until, the last 18 months or so. So I want to make sure to share this with you. A rate adjustment may be available to you. Now, if you had someone help you set up your mortgage on your property now, I would simply send an email to them or give them a call, whatever it means that you have to reach out to them and just say, do you have a rate adjustment option for my mortgage? Now, they could come back and say, yeah, no, we don't have one. We don't do that. That's fine. But on the small likelihood, or there's not a small likelihood, there's actually a larger likelihood now. On the likelihood that they have an option for you, they might say, yes, I have an option for you, so-and-so. And this is it. If you send me a check for whatever amount, we will reduce your mortgage interest rate by this much. So let's say your rate's at 3%, right? They might offer you a rate adjustment to 2 3/4, and at the cost of let's say $700. It's just kind of, it can be anywhere. It's usually not a huge sum, but it's usually, it's not a small sum either. So a few $100, you pay it, you send a check into the bank, and they will adjust your mortgage without you going through a refinance, without you going through an appraisal, without you producing all these financial documents. It will take you literally 5 minutes. Now, that being said, if you went through the entire refinance process, you could get your rate adjusted even lower, possibly, than a rate adjustment. But the rate adjustment option is sometimes offered by financial firms and banks for not only our best clients, but just clients in general. And sometimes you just have to ask to see if it's available. So I've done this with my personal mortgage twice in the last 18 months. And so I want to make sure that you know that the option might be available to you. Hey, you know what? It takes 5 minutes. Send an email, send a message, see if it's something that you might have available to you, and then you can decide whether or not it makes sense. The reason why you have to send them a check, because they usually charge you an application fee, and that's why you send the check in. But you usually can make up that amount in a matter of months, and usually within the first year. So if you're on a 20 or 30-year mortgage, it could make a lot of sense for you. So give that some thought. I want to make sure you pay attention to that, because that is something I will tell you that even is relatively new for me, and I'm going to guess that could be relatively new to you. All right. So thank you so much, my friends, for watching, supporting our programs Friday. I got to give you some good information, but I also got to let you get back to your weekend so you can start celebrating the week. A week well done. You survived the week. You got work done, whatever. It's time to celebrate. Go have some fun, enjoy. I wish I could high five you. I just hope you have a beautiful weekend. As a reminder, you can find full episodes of Love Up with Winnie Sun on NASDAQ, Amazon Fire, and Roku. Do me a favor, share the show with your social community, your family on social. Be well, and I can't wait to see you again on next week. Take care now. Bye-bye.